is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the March 3rd, terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do everything we can to squeeze everything out of our terrific Tuesday. Of course, the easiest way to do that is to always remember what's talked about is a dream, what's envisioned is exciting, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me this morning. I'm honored by your presence, and I'm here to serve you. Feel free to give me a call at 877-927-6648. Internationally, you can reach out to me at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question, so don't call in for yourself. Don't call in for me. Call in for someone else. A little random act of kindness. And that, as our leader, Tom O'Brien, likes to say, that is a beautiful thing. This is Terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading off 70 points, trading at 18,218. The S&P is down 10 points at 2107. Composite off 23 at 4984. Russell 2000 down 8 points. DAX off 34. FTSE down 24. Gold's up $3. Silver is basically flat, down 4 pennies. You've got light sweet crude up 11 cents out there. Leading the charge, the upside, revving up its engines. You've got AutoZone. AZO is a ticker symbol, up $11 and change, up 1.7% out here. You've got, you got Springleaf Holdings. They're up $10. That's on a, they purchased Citicorp. I think, was it Citi? Who was it? Citigroup. Citigroup sold One Main Financial to them. They're trading nice and trading up nicely this morning. Ligand Pharmaceuticals up 7%, up $4. Tracon Pharmaceuticals up about was up. Where the heck did it go? Up about 15%, up $2.68. Okay, let's start off. I don't know if you caught the first hour. I certainly don't want to repeat all of that for each of you. But in essence, we took a look at the composite. Maybe if I'm struggling to find some time out here, because, the conversation was about the composite. Let me summarize what it is that we took a look at. What you and I took a look at. In fact, you go back and watch the first hour. The archive should be up here not too long from now. And we took a look at, really during the first, maybe even second segments out there, we looked at what typically takes place at tops inside markets. We looked at the patterns that are out there, the most consistent pattern with regard to market tops. And we do not have that. It was present in 2007. It was present in 2000. We do not have that in place. That bodes well for what I anticipate, which is the market is going to move up nice and higher. We're going to have this little spring fling. It's going to move higher into May, a little bit of a pullback. It'll make a higher high into the July timeframe before the market really starts to take any time off. That being said, what is it that you want to do? Well, you want to prepare for that. You want to anticipate that out there. And that's what I think that you should do. And it's going to be easier, in my opinion. The better trade is the one that is to the upside. But you never know when these retracements begin. You never know, where it is that they're going to be able to, how far they're going to be able to pull back. You got to really wait for those reversal signals, those bullish candles out there. So I'm not saying that you can't trade it in both directions. You can, but on the longer term basis, on the weekly, the intermediate term, we'll call it, on the longer term, on the monthly basis out there, these markets want to move higher. So you've got to be taking a look at where are your places to go ahead, and when is any kind of significant retracement going to begin. So we'll start off the day actually looking at the summation index. Now, unfortunately, I'm doing the show here and it's 10 a.m. We got a lot of time left in the trading session, but you can use this as a gauge, as an example. So the gauge is you've got the Dow. We'll look at the Dow first. Dow's off 68 points. Let me look at the summation index here for the Dow. What we saw here inside the Dow is Friday, actually, we're looking at the price oscillator. That's the bottom portion of my screen. Friday, there was enough energy, enough net declining issues inside of the Dow to push the price oscillator below zero. That is where you can begin to see a change in trend. Sometimes it can be a long-term change in trend, sometimes a short-term. In this case here, I expect that it will be a short-term. Well, then yesterday, as the NASDAQ went ahead and pulled everything up, it also got that price oscillator back above the zero line. We still have this little declining tops inside of the Dow's price oscillator. And right now, as we speak, we're back down below zero. Now, when you get below zero, that's where you see, as I say, those short-term changes in trend. Hey, we're not that far off the top in the Dow. You're at 18,215, so not too shabby. So it's an early warning indicator. Although I can't guarantee it, I would say pretty decent chance if the Dow closed down 70 points or so. Pretty good chance that the price oscillator will also be in negative territory. That says that the sellers have control of the ball, have control of the game. And you really don't know until the following trading session or sessions as to what type of selling they really have, what kind of volume, what kind of momentum that they can actually garner out there. Again, what I want to do is set the expectation. And the expectation should be very clear. These markets over the rest of coming into the spring and summer, they want higher price. So now what we're doing is we're anticipating, okay, I expect, as you know, you listen to the show, you know, I was expecting the market to begin a retracement. Not last week, I think was the end of the prior week out here. It's just a little off kilter, that's all. It's off by a week or so. That's really not too bad as you look into Stevie's crystal ball out there. It's not too many people giving you that crystal ball view. But I'm giving it to you, that's for sure, in a good way when I say that. Now, that's what's going on inside the Dow. Let's take a look at what's going on inside the NASDAQ Composite on the shorter-term time frame. Maybe that is even the better place to start. NASDAQ Composite right now is off 23 points. Let's go take a look at its summation index out here. Let's take a look at its price oscillator. Now, with regard to the NASDAQ, it's so close. So it's going to need some more energy to the downside. Its price oscillator is still just above the zero line. Again, the price, it's really about issue number of issues and volume, but I'm just going to give you a kind of a gauge. And the gauge says, hey, the composite is off maybe 30, 35 points or so. Pretty decent chance that its price oscillator also would dip below the zero line. If it does not dip below that zero line out here, then the bulls still have control of the ball. The buyers still have control of the ball. So we're not that far off the tops. But again, that type of movement, and then what you really want to see is in the New York Stock Exchange, the Dow, inside of the NASDAQ Composite, you want to see all those price oscillators dip below the zero line. Now, in the case of the New York Stock Exchange out here, let me see where we're priced at, where we're at to the downside. Inside the NYSE, you're down 44 points as we speak right now. I don't recall the number of issues off the top of my head. I don't know, it's probably like 600 or so, but I don't quote me on that. I just don't remember it off the top of my head. And I'm just going to use like a point move for you. It'd be a lot easier. Because I always get the emails from folks saying, hey, where can I find the net declining issues out there? You know, it's a data feed that I've got so I can keep track of it and I can keep track on my spreadsheet. But if we take a look at the New York Stock Exchange as we speak right now, its price oscillator also now just slightly below the zero line. We're minus 20 out here. And so they all have a pattern in place that on its daily chart suggests that we ought to see some kind of retracement out here. And I don't know whether it's going to begin today or not. And won't really know until we see the close out there. But what I don't want you to start buying into or believe in is that's it. That the end is that the party is over. That is not the case. We do not have the same patterns that were present at those highs in 2000, in 2007, back in 1928. It basically every major market high, as well as many of the lows out there, many of the bottoms that have formed in the market. That pattern is not present out here. The pattern that is present says that the market needs to do just a normal retracement out here, whether it's 0.382 or 0.618. I don't know the answer, but that is what you should be expecting. So that's taking a look at what's going on inside of those indices. If we take a look at the VIX index right now, still well below the 50-day exponential moving average, which is priced out right now, looks like at 1624. You've got the VIX index at 1375. I shared this last night with folks I filled in for the second hour of Tom's show while he was driving. He's back today, and I said to this, I shared this as part of the workshop that I put together for the VIX Index, which is a great workshop. I'm not saying that because I put it together. I'm saying that because of all the emails that I got from the folks that attended the workshop. I'd like you to attend that workshop as well. In fact, you can gain access to that just simply by subscribing to Mastering Probability for the next 30 days, which, you can do that for free. And look, if information is important to you, if knowledge is important to you, knowledge that will last a lifetime out here, you know how people will say, you've heard this expression before, and if you already heard it from me, I apologize for repeating it, but it bears repeating. And this is where sometimes you've got to just take a look. You got to step back and take a look at the information that people are regurgitating, that people are that are saying out there, and say, but where's the logic here? So it goes like this. How many maybe you haven't said this before, but maybe you've heard somebody else say this, and that is this: that the VIX index is low, the market is complacent out there, and when you hear that. You hear the other thing, which is they say there's no fear. Now, when you hear that, does that instill confidence in you that you should go ahead and invest in the market? Does it? No, it doesn't invest that, because what they're really saying is don't go buy this market because there's no fear in this market. You shouldn't be buying it. There's just complacency, and the indication is that the market is going to crash or do something like that, right? And then I say, well, if that's the case and people believe that, what is it that they believe when the VIX index is up real high? Are they telling you, hey, the VIX index is really high and now is the time to buy? It's high and now is the time to buy? No, they're not saying that. So now you're dealing with expressions that you would never get into the marketplace. And that's just absolutely insane out there, because that is not the way. That makes for great fodder. It makes for great, maybe it makes you stay tuned or something like that. Don't buy into that. That is the most BS that you will ever hear out there, because it's not anything that you can actually use for trading, and it's going to keep you from taking the action that you need to take out there. That's not the way that you trade the VIX index. If you want to learn how to utilize the VIX index as far as tools for assisting you in garnering and making trades out there, then go ahead and sign up for the newsletter service, and you'll be able to go ahead and gain access to that workshop, because I give you 5 actionable ways for you to be able to utilize the VIX index, so you know exactly what's going on. At this stage of the game, it's out 1372. I would say that the VIX index is a better indicator of liquidity. As the VIX index is moving higher, it tells you that you've got less liquidity. As it's moving lower, you've got more liquidity out there. So that's what's going on inside of the VIX index, outside of the so-called fear indicator out there. Let's take a look at what's going on inside of the let's go take a look now. Let's go see what's going on inside of the index ETFs out here. We'll obviously have to do that when we get back from the first break. But when we do, we'll go take a look at the Qs specifically. As we do take a look at the Qs right now today, nothing more than an inside day. Yeah, it's trading lower. Big deal. What you've got is an inside day out here. You know what the meaning of an inside day is, if that's how this thing trades? It means that the previous trend continues. That's what it means. And where would the Qs take you up to? Well, believe it or not, 115.36. This is Steve Rhodes. This is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 70, about 71 points right now. S&P down about 10. So let's go back to the ETF structures out here. Let's take in the ETF structures for the indices, and we'll take a look at the QQQ ETF. So what we know so far is that, let me blow this up just a tad. Yesterday, the Q is moving higher with 22 million shares. So far this morning, in the first hour of trading, 4.5 million shares to the downside. But with regard to the downside, it's trading with inside yesterday's candle session out here. So that's what's referred to as an inside day. You got an inside day, it's basically no reversal signal, no reversal candle or anything along those lines. Doesn't mean it won't turn into one. All I can do is tell you what it is here at 1025. So therefore, we've got to come back and take a look at what else we know about the QQQ ETF. And the one thing that we do know is that it broke above a B point, and it did it with volume. It did it took out the November 28th session that had 17 million shares. Nonetheless, that was the day after Thanksgiving, and it took it out with the volume of 29 million shares. So, you know, that's pretty good, because I don't know how we're going to sit here and say that it wasn't taken out with volume. It's not like I'm going against 19 million against 17. I'm going 29 million against 17. Therefore, in essence, what the Qs are communicating to you and I, it's got an A to B equals CD to the upside. That ought to take it to the 115 area. Does that mean that it's going to do it straight away? No. Can the market retrace? Yeah. Where would the Qs retrace to? Well, There's a couple different areas we can take a look at. Let's look at retracements first. Then we'll go take a look at our TAS market profile. So we'll go take a look at two excellent tools to be able to help us to do that. So remember, we took a look at the summation index. We took a look at the price oscillators for the NYSE, the Dow, and the NASDAQ composite. If all three of them get below zero, the message there is that we just simply have the retracement that is underway, the anticipated retracement that is underway. Not that the market has made any kind of major market top or anything along those lines, just simply the retracement. Inside the QQQ ETF series, your retracements that you would be looking for, and I'm just using the last leg. I'm using the C to D leg that is underway right now. You're looking at 105.58, 103.20. as your numbers out there using the Fibonacci retracements. If we go ahead and we add our market profiles, let me turn those on, and I will turn that off. So remember, I was giving you 105 and 103. Let me go ahead and turn off those numbers. There we go. Now we're just going to take a look at market profiles. Now the market profiles out here, you can see you've got the way that this set up, and this is profiles based on what took place, started forming February 27th out there. Really has more of a bullish tone than anything else, but any close below the current support level on that is 107.76. So you need to see a break of that in order to get down to one of those retracement levels, maybe down around where the old resistance level inside of the NASDAQ was, right around the 103.59-ish area. So your confirmation that you're going to get to one of those deeper retracements, I would say, is going to be a close below that 107.76 area. But as we speak right now, nothing to worry about. If you're a bull, there's no message here yet inside the QQQ ETF that there's anything to worry about on the shorter term time frame. Let's check out the IWM. Let's go see what the Russell 2000 is doing out here. Inside of the Russell 2000, you've got 4.2 million shares to the downside. You're testing yesterday's low that had 29 million shares out here. We have our market profiles turned on, so all that the IWM has done has gotten down to that area where price is most comfortable, referred to as that point of control or the center of the box at 122.38. Now, this is a new profile that has established itself. That began yesterday. What we know about the IWM is that it's broken out of its consolidation, long-term, short-term consolidation, and therefore the gift would be the IWM pulling back to about the 120.58-ish level and holding that, because that is basically where I believe that the bottom of the consolidation, or the top of the consolidation, really began forming out there. That's what's going on inside of the IWM. Now, in the IWM, its price projection, by the way, it's a 17-point move is what we'll call it. So that tells us right now, as long as the IWM is able to stay out of that consolidation, stay above the 120.58, what that is communicating to both you and I is that price wants to move up to about the 137 area. That fits right into the long-term 15-year, how long was it, 11-year? I can't remember off the top of my head out here, but that fits right into, I guess I can do this. Let me switch real quickly before we go into a break. Index monthly. Let's actually pull the chart, put it up on the screen. That way I can talk from accuracy, because that's what you want to hear. 17-year, 500-point consolidation. Of course, we saw the Russell 2000 break above that level, and that was back here in January, back in 2013. Its price projection, 1350. That's the minimum price projection. That's where it's headed to, and that's where the IWM is headed to, the 137-ish area. This is Steve Rhodes, TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 72, S&P down 10, composite off 30 points. At a email asking me what's going on in the skies out there, meaning what type of celestial patterns are in place or coming in place that we should pay attention to. Well, today's March 3rd, tomorrow March 4th. And in fact, right exactly at, let's see, we're off daylight savings time, so back... you fall back, you spring forward, right? So 5 hours. So we're at 13:57. So 1:47 tomorrow afternoon. How's that for being exact? You've got Venus in conjunction with Uranus out there. Now, those are referred to as the 0.618 planets because it takes 225 days out of 365. You take 225 divided by 365 in order for Venus to revolve around Uranus out there. So that's kind of referred to as the 0.618 planets. Does the market, now does that mean that it turns bearish or something like that? No, that's just simply responding to the question of what is present inside the marketplace. What we also have taking place, now this is on The following day on Thursday, you've got a full moon. And now this is going to be the full moon. You've got both the full moon and the moon at apogee, meaning it's the furthest point from us during that cycle. So the full moon is going to, it's not going to be that big full moon. It's going to be the smaller one that is off in the distance. Nonetheless, that takes place exactly at 1:07 in the afternoon. That's when we see the full moon. Apogee, where it's furthest from us, that actually takes place at about 2:37 in the morning. So you got to get up really early Wednesday morning in order to see that. Now that's important with regard to gold, in my opinion, just simply because of the full moon effect inside of Goldilocks. Now it does not mean that gold forms a bottom out here, but it does mean if we take a look at the gold chart, and we'll go back and take a look at the ETF structure. I'll go ahead and finish those off for us as well. But as we come into that full moon, we're going to want to see what price does out there, because if price continues to move lower, it doesn't have to on that specific day. It's within a day or so. If gold can, whichever direction gold moves, and this is the cool pattern inside of gold here, is that it's in a decided downtrend. So you can see the price channel on my screen out here. So it doesn't get any easier than that. If gold is going to break the current trend that it's in, it's going to have to be able to break through this downtrend channel. We know that prices made it back to the 0.618 retracement out there. Speaking of 0.618, let's test that area on, looks like 4 different occasions, which has held. What both you and I know is that the commercial traders are still maintaining high net short positions as a percentage of open interest. That means that they're anticipating that metals are going to move lower. So we've got a full moon that's coming in on Thursday. So all we got to do is really mark the high and low of that candle session. Can it really get any easier than that? And the answer is no, it really can't. Does this work all the time? No. But does it work like enough time where if you were trading the metals, which also means if you're inside mining positions, you actually want to know about this pattern. You want to use this pattern out here because it's going to help you to understand what's going on, where to get in, maybe where to get out because of the directional correlation that occurs between gold and, for example, the mining index out there, silver in the mining index. So at this stage here, what we know is we'll continue to watch this, but that's the other element that takes place. It also helps us to mark where the S&P futures are trading at as well. So here's gold. I can't tell you which way. I can tell you that the way that things are set up right now, we do know about gold, is it actually wants lower price because it hasn't broken any of these trends. It just keeps fighting itself against the 0.618 retracement. The next level down, by the way, is 1168. And if gold is able to break through this descending price channel and do it right around full moon Thursday out there, then the signal to us will be that, okay, maybe regardless of what the commercials are doing, there's at least a bounce that would be in play here. And the bounce inside of gold could be a nice bounce. Maybe it's a bounce, maybe it's a bottom. That I don't know. But the bounce inside of gold could take up to just simply 1263. So you got about $50 or so out there. So that could set up a decent trade. So we'll come back and take a look at that. But basically, that's what's going on inside. Well, there's one more thing that is going on inside of the skies out here. And that becomes Thursday as well. Now, this is kind of unusual. We've got both Thursday and Sunday out here, which would bode well for the market making a nice move lower into next Sunday, maybe next Monday. And that is, and of course, this is today's Tuesday. Tuesday. Too bad we don't have our man Larry Pesavento with us, because on this coming Thursday we've got a 16 planetary index day. The way that Larry and Dr. Ruth Miller did, if we went back and took a look at the daily aspectarian, the ephemeris that they used when the work was originally done, it actually would be a 15 P index day, and that takes place on March the 5th. So you've got the following day on Friday, March 6th, you actually have a 3 planetary index date. So the original work that the two of them did, you've got back-to-back March 5th and March 6th out there. That's Thursday and Friday. And then if we take a look at the newfangled way of doing it, because we've got the new American ephemeris, so you've got some new planets that were were part of the daily aspectarian when they did their work. You've got planets like Chiron and I forget him. You got three more planets that enter into the picture out there. So, oftentimes that's where you start to see some short-term changes in trend out here, and that's in the early part of this month. So that's between Thursday and Sunday of this week. Other than that, that's all that is going on inside of the skies. Okay, got that out of the way. Let's go back and take a look at what's going on inside of the ETF structures out here. So we looked at the Qs, we looked at the IWM. Let's go take a look at the SPYs, see what the SPYs have going on. The SPYs, we've also got, looks like an inside day out here. The SPY, the low of the SPY so far this morning is 210.77. The low of yesterday is 210.72. So 5 pennies away. We can see the TAS market profiles that are the SPY is trading inside its daily box. You've got a new market profile. It says support ought to be the 209.08. You start to break below that support level, and that says okay. Then we start taking a look at maybe retracements, just simply of that C to D leg. So let's go do that. If we take a look at the retracement of C to D, that would say you break the market profile. Your next target becomes 206.75. That's your dead cat bounce, your 0.382 retracement, or 203.35. Why am I providing you with these numbers? I'm providing with these numbers because what you'd like to do is you'd like to be able to buy the next retracement inside of the markets out there. That's why I'm giving you those numbers. If we take a look at the Dow Diamonds, the DIA, down 70 cents, volume of 781,000 shares. Hey, the Dow Diamonds yesterday, 3.2 million shares. Not too bad. Now, the Dow Diamonds, they took out a B point and did it with volume. That was on February the 20th out there. Was that Options Friday? Yeah, that was Options Friday. So, but, so now you're not really sure how do you measure that, because that was 8.9 million shares. See, I won't remember that 2 weeks from now, 3 weeks from now, 5 weeks from now, 6 months from now. I'm surprised that I remember it today. But the December 26th high had 1.9 million shares, and it was in essence taken out with volume. If you don't like that, we don't use that day. That's fine with me. Let's use the day of February 23rd. That was 2.7 million shares. And the next day, February 24th, 4.2 million shares. Guess what? The Diamonds have a confirmed A to B equals C to the upside now. That A to B equals C to the upside says 192.54, maybe even higher, 198.64. So until we see any kind of other evidence out there, that's actually the message of the markets. I have a request here from Danny in Atlanta to go take a look at SLW. So let's go take a look at silver wheaten out here. Let's go see what we've got going on here. SLW. I think I've seen it. Information inside the den. So I believe they did a secondary offering out here inside of silver wheaten. Let's take a look at what it is doing so far today. Down with 4.2 million shares out here, trading into the potential level of support, which is December 17th. The top of that candle is 2040. The bottom of that candle is 1869. I'd have to say that support is really the low. Yeah, it's 1869 would be the number, a little piercing candle out there. I would say that that's got volume of 8 million shares. You've done 4 million shares so far. I imagine that, Danny, you're looking maybe to buy this. Again, I think I don't know if you are or you're not. With regard to any buys inside the mining equities, the most important thing that I can share with each of you out there is pay attention to what takes place on Thursday and Friday next week, knowing that this week. What do you mean next week? This week, with regard to that full moon, I cannot provide you with anything better than paying attention to how the metals respond to that full moon out here, and to recognize and to understand that the large money, presumed to be the smart money, still is at these high net short interest rates, not interest rates, but high net short interest as a percentage, high net short position as a percentage of open interest. I know I can get it out if I really concentrate. I know that I can speak. So I would have to say wait. So in the case of silver wheaten, it could mean a test of the 1869 level out there. And that's what's going on inside of that equity. Hopefully that helps you. You're down below market profiles, which was at 21.15. So that's what I would say to be focused on this coming Thursday. That was SLW. So we've looked at the Qs. We looked at the IWM, SPYs, the diamonds. Hey, let's go take a look at the energy sector. I pointed this out yesterday. We had the energy sector, the weak sector out here, right? Came back and tested a breakout area and did it with light volume. did it with majorly light volume. That breakout, small breakout, nonetheless, February 3rd, volume of 47 million shares to the upside. And yesterday you came back and you tested that with 17 million shares. Yeah, light volume out here. And very close to a hammer candle that has formed out here. What I can't tell is whether or not the wick of this candle is really, truly twice the size of the body. It's really close out there. What we do know, even if it's not a hammer candle, we do know is that the XLE, as it pulled back into a level of support that it thus far has held as that has held. What it hasn't done, what it's struggling with this morning, it's running into resistance, and the resistance area we're going to use as our TAS market profile. The bottom of the box being our support level is at 78.81. I'm sorry, is at, 78.81. The actual high today, 78.77 out there. So what you would like to see out here is you'd like to see it get back above the 78.81 area. But inside the energy sector, the XLE, one of the weaker sectors out there, it actually has been able to hold support. Chevron, CVX, I believe we were looking at yesterday as I pull that up, just to get a feel. Because Chevron, Exxon, Schlumberger, really important. Now, in the case of Chevron, this absolutely does look like a hammer candle. It looks very similar to what we looked at inside the XLE, but to me that looks like the wick is twice the size of the body of that candle. Now what we're seeing here is Chevron here is tested the low of yesterday, I believe, 104.93. So far it got down to 104.81. Now the key here, and this will probably help us to understand what's going to go on inside of the energy sector. Chevron's not as heavy of a weighting as ExxonMobil is. I think Chevron may be the second weighting out there. But a close below the hammer candle. In the case of Chevron, that would be a 104.93. If you're long, you're wrong out there. Now, what does that mean? What that means, because it's a cute expression, isn't it? But what it means is that price will go down to the next level of support, which inside of Chevron's going to be this high volume swing point from January 30th. That's got 20 million shares. The high, which is 103.28. The low is 98.88. Nonetheless, if in fact you can, volume-wise today so far, 1.7 million shares going against 7.3 from yesterday, but it's not really traveled into a level of support like we saw inside the XLE. Just simply a hammer candle, no other completed pattern other than maybe a retracement. Let me see here. Retracement-wise from low to high out there. Nah, not even a retracement. Hasn't got down to the 0.618 retracement area. But it does say that the bulls are trying to defend Chevron. Not saying go ahead and take a trade inside of the marketplace. So that's what's going on with that. Let me see. We haven't taken a look at any, and market's really not doing a whole lot, just hanging out here at the current lows. Let's take a look at AutoZone. AutoZone was out with numbers here. Looks like net sales of $2.1 billion versus 1.9, and net income of $211 versus $192 million. So you've got AutoZone, which is on fire. Gaps up this morning. Volume behind the move, 159,000 shares, either at the 52-week high or, well, how did I do that? I didn't mean to do that. How did I? That was weird. Okay. Let's go back to this. Wow, that's weird again. Okay, come on. Get it together here, Steve-O. Oh, I know how I did that. Okay, so this is at all-time highs, taking out, well, let's see, this took out a swing point back here. The swing point, the B point of its A to B equals C, the inside AutoZone. That took place on December 31st. That had volume of 207,000 shares, and AutoZone took that out with 281. There's your confirmed A to B equals CD to the upside inside of AZO. And if we take a look at that price projection, that's going to give you a first price projection. Your 1-to-1 area is going to come in at a price point of 704.91, but more likely 741 out there. 741 is likely the area where AutoZone is likely to head to. If we look at, see, what else do we have moving out here? Well, you know what? Whatever it is we have moving, it's going to have to wait. It's going to have to wait till we get back from this breakout here. Dow off 74, S&P down 9. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 83, S&P down 11 points, composites off 30, Russell's down 7.5 points out here. Let's just kind of do a overview as to where we're at out here with regard to the market. So then this is how I want you to anticipate the day, because I have no idea how the trading session closes. But the Dow off 82 points, 83 points. We're going to do this again for you. We're going to take a look at the summation index for the Dow. It's taking our price oscillator down below the zero line. We were down below there a couple days ago, Friday to be specific, and the sellers should have had an opportunity to have done something with the market. They did not. We're back down below that level. This has been showing us for a period of, well, really since about the time period here of February 24th, that the Dow was struggling, and it was showing us that there's going to be some type of short-term retracement out there. So that's what we want to anticipate. That's all that it is. Don't get too caught up and too hyped into, other stuff out there. So I'm going to say if the Dow is off about 80 points, 75 points, pretty good chance that it's price oscillator down below the zero line. Inside the NASDAQ composite, it's got more work to do to get to the downside. Still positive. If it's positive, the NASDAQ being strong like bull out here is a problem. It says, okay, I don't even care if the Dow and the New York Stock Exchange are below zero. Still may have enough. I think Basil likes to use that term, residual strength out there. Still has enough residual strength to go ahead and pull those back above the zero line. But if it gets down below that level, let me see, where is the composite actually trading at right now? So it's going to need a little bit, it's going to need more net declining issues. So price is not the way to actually do it. But what we've got, I'm just trying to, but price is the easiest way for you to take a look at it, most likely. You're looking at, it's down about 30 points. So say probably down about the 45 point or so range, maybe. That goes ahead and puts the summation index and starts ticking it to the downside out there for short-term change of trend. The duration of which I don't know, should last like a week or so out there. Could be very brief, could just be a few days, could be Monday out there. No guarantee that it's even going to happen just yet, but I know what it is that we're going to look forward to watching. The widest swath of market, New York Stock Exchange, we've got its price oscillator now. They've all had the same pattern in place that have been suggesting that the market still wants to make this retracement out here. And that's a beautiful thing. That's a beautiful thing because, as I say, I believe that the market wants to move higher into May, into June, into July out there, and the market just simply doing what it should be doing out here. So that's what I would say that you'd want to take a look at. As far as anything else, you've got the Euro-Japanese yen. That's headed in the proper direction, which is to the downside, to suggest, a retracement could be underway out here. It hasn't done a lot of damage, and by damage, I'm saying if I take a look at the lows to the high out here, that high being February 12th, the Euro-Yen easily could get down to about 132.65, maybe even 131.55 out there. Right now, it's trading at 133.79. Very important to watch that tool, watch that indicator, because it is the liquidity inside of our markets. When this thing heads lower, our markets typically head lower as well. Let's see, anything else of significance to look at out here? None. I know I've gotten some emails here about natural gas, what's going on with regard to natural gas out here. We've taken a look at the pattern inside of natural gas. It said that it would make a high right around February 25th. That was off by 2 days. The actual high came in on February 23rd out there. And that is a historical seasonal pattern that has been in play. We looked at that. That was a 11-year seasonal cycle that we looked at. And now the real buy inside natural gas, if there is one, doesn't come till for a few months, I believe. Hey, stay tuned. Our man Basil Chapman is up next. It's been great to be with you on Terrific Tuesday, but I'm going to look forward to a wonderful Wednesday with you as well. Stay tuned for Basil. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.